let's start off with what is MMT, or modern monetary theory. This is a theory that any country in control of its own currency can print money to pay its debts and fund its policy goals, along with stimulating the economy. Now, you may wonder, well, what happens if I print all of this money? How is the government going to combat the inflationary effects? And the theory boasts about the idea of using taxes as a way to pull that money back in and control inflation. So, does MMT work? Absolutely not. And here's why. Taxes have a limit, right? Like, there's only so much you can tax someone. Just because you tax everyone's income does not mean you will reclaim that money you printed. Tax deductions and write-offs would be one of the biggest factors in preventing that reclamation of money via taxes. Now, the other one being the actual rate at which you can tax people, right? So in a democracy, you will have a very hard time running a federal tax rate anywhere above 50%. At that point, people will essentially be contributing more of their output to the government than their own pockets, and they will feel like slaves. So that's something that's not going to go over too well. And here in the United States, we're a government controlled by the people, right? We're a democracy, so we can vote in and out officials based on their policy stances. So at some point, if you are to run into this scenario where the government would need to raise taxes to fight the inflationary effects of MMT, you may have an elected official come into office that would not be in support of higher taxes. And at some point, those taxes would either not be raised or actually be reduced. And the dynamics are too vast to work together because the taxes will never be raised fast enough to test the proposed functions of the theory. Whereas, let's just say in a communist state, the government could move taxes how they see fit. So they could move them in accordance with the inflation rate and try and execute this proposed theory, which again is just a theory. Now, the other issue with the idea of using taxes as a inflationary crunch is that the taxes don't actually destroy the money floating around in society. It's not like those funds are burnt, right? So the main concept of inflation control really is just a surface level concept. Once that money goes back to the government, it will then be respent at some point, and initially would just act as a short-term reduction for inflation. So if you think about how the government's going to combat inflation, it's only going to be temporary, where the value of the currency is still going to be devalued because there is a inherent increase in supply over the long term. And we can take Japan, for example, who has been running a reckless printing operation for decades now. And we look at their growth metrics, their GDP is less than their levels seen in 1995. So obviously this country is in an extreme growth shock. This is primarily due, again, to the fact that reckless money printing, devaluing their currency, in turn destimulates growth. The lower your currency's value is, and as it continues to fall, the less likely you are to work very hard and basically value that currency, right? And value what you do for that currency. And it's really this simple, right? You cannot sidestep the supply and demand laws of economics. It just cannot be done, right? So now there's a reason why ancient things have value, and it's primarily due to their uniqueness and scarcity. So, for example, there are rocks. They are older than the Mona Lisa, and they're worth only a fraction of what that Mona Lisa is worth. And this is due to the supply and demand around the scarcity of those items, right? There's a lot of rocks while there's only one Mona Lisa. So you cannot cheat death, and you cannot cheat the laws of supply and demand. So if you increase the supply of any goods or currency, you're going to inherently decrease the demand and price. And this is something that cannot be avoided. And the more we push the pedal on monetary easing, money printing, the closer we get to realizing a devalued currency. And this has been happening throughout history. People don't understand why inflation is happening. They blame oil companies, they blame governments. In reality, it comes down to money printing. And those that are responsible for money printing is the government. So if the government is reckless with the money printing, the value of that money will be recklessly devalued as well.